In this week's update, US earnings smashing expectations and overriding the seasonal wobbles. Sell the fact could still appear. Battery material stocks are roaring locally. And Bitcoin is just teasing. My name is Garry Davis, and as always, this is general advice only in this video. And please remember to like and subscribe the video. All right, just start with some market perspective. We're getting a lot of sudden moves backwards and forwards at the moment. We saw a sell-off on the Friday before last and then into Monday, which was really fears around COVID. And so the market is flicking backwards and forwards fairly dramatically. But the medium-term trend remains very strong. And I just want to make a point that I make very, very regularly, but clearly some people don't quite get the message. I was recently accused of flip-flopping on the direction of the market. And what that person failed to understand at any level and interpreted it as flip-flopping and being unsure of what my opinion on the market was, is just the value of keeping an open mind and responding to what the market action tells us. If the market is flip-flopping backwards and forwards, then that's what we should recognise and line ourselves up with. It's how one survives and prospers in the market. It's worked pretty well for me for a long period of time, and people who have strong opinions or the need to be right rarely survive in the market. And that's the important thing to recognise. If you form a strong conviction about something that's going to happen, then I reckon you're pretty much dead. And particularly in these markets these days, because the moves are becoming more and more volatile. So you certainly don't want to take a definitive position and stick by it. All right, earnings season in America is just simply amazing. And it's not just because it's big percentage gains on the corresponding period in 2020. That's not it at all. These are beating expectations, growth quarter on quarter, beating analyst expectations that were already raised anyway. So the US earnings season is coming through as one of the strongest that I can ever remember. And we're seeing the beating of expectations on both the top and bottom line of something around the order of 80-odd%. Now, we've been there before. We've seen those sort of ratios before, and we're still early on in the earnings season, and the better results do tend to come out earlier. But the thing for me that is really quite stunning about the American reporting season is that the companies are providing forward guidance that are well beyond what is normal. And we're seeing an average number at the moment of around about 15% guidance increases. And that's after consensus earnings had already been raised for the S&P for this year to date of 16%. So earnings have been ratcheted up, earnings expectations ratcheted up, the companies are beating them, and then they're going out and raising guidance as well. So there's just a massive amount of confidence around the US market at the moment. And whilst we can always see the market cool off after earnings, you buy the rumour, sell the fact, and we've seen a bit of evidence of that. The fact is some of the earnings are just so strong that it's just completely overcoming that, and we'll look at a couple of those charts in just a minute. I'd also point out that this is not just an American story either. The Eurozone business activity is the strongest that it's been in 21 years. So we're seeing strength in many, many places around the world. Beg pardon. Now, if we look at the technicals, there are dozens and dozens of US large cap breakouts. Certainly, the market has changed from 2020. There were a lot of small cap speculative stocks in America that were going up astronomically. We're not seeing that now. There's very, very few of those. But we are seeing some incredibly robust breakouts in the large caps. Stocks with market caps anywhere between $50 and $500 billion. So this is what's really impressive. And a lot of people are saying, well, these big cap stocks are overvalued. But if you look at the earnings results, that really puts that into question in my view. And this week we've got a real bonanza coming up in big tech. We've got Apple and Amazon and a number of other of the big tech companies reporting this week. So it'll be very interesting to see. I think it's a given that the results are going to be good. It's the thing that I'm looking for is how does the market react to that? So before we get into the American stocks, let's just look at a couple of these stocks. So this is Facebook that reported on Friday. Look at this breakout. We were already in a really strong uptrend. The breakout was very, very strong. The volume huge. So the outlook for Facebook is really very positive. Snap absolutely killed them. I think it was up something like 27%. And often when you get these huge gaps above a breakout zone, you often then see the price come back towards the breakout level in the same session. And that didn't occur this time. It gapped up and then just kept going. And again on massive volume. And if you look at the price chart of something like Nike, for instance, which had a similar sort of pattern, and 2 weeks on, the price of Nike is still going further and further higher. So I think something similar might occur with Snap as well. And there are plenty of others. Moderna reports on August 5. Look at the run-up in the share price. Massive breakout here in early June, around just under $200, and now we're at $350. And that's in about 7 weeks. That's the run up into earnings. Now, whether that earnings report will signal the peak in the price in the short to medium term, who knows? But this has been an amazing performer. Here's Apple. So Apple has run up quite nicely. It's run from around $130. We're now almost to $150 in anticipation of a good earnings report. And that is on July 29. And also on July 29 is Amazon, which broke out quite robustly, strong volume, terrific breakout on the 6th of July, has come back, retested the breakout, a very calm retest, and has started moving away again. So we might see a bit more strength in Amazon in the next couple of sessions. And then again, the really important thing here for the market as a whole is how it responds to the earnings report and what happens in the couple of days following the earnings report. That's the most important aspect. Okay, so American stocks, the S&P was higher by just under 2% for the week. We had a one-day scare around COVID over the weekend and into Monday, and then the market just took off again. It's quite extraordinary. And as I've been saying, the earnings results are really living up to expectations. Seasonal weakness that I've been speaking about, and I was quite cautious about last week, is playing out in the small caps. So that side of the market dynamics is certainly valid. But the S&P just keeps bouncing off support and working its way higher and higher. The US dollar was mildly higher to 92.91. The 10-year yield was steady at 1.28. And the VIX spiked on Monday to 25, which was quite significant, but then just immediately collapsed back below 20 and ended the week at 17. So if we take a look at the S&P, you can see there was the big sell-off the prior Friday, the 16th of July. Big gap down and concerted selling on the Monday. And then just Tuesday, it was just like it never happened. It just all reversed around and went straight back up again. And one of the drivers of that, of course, is the US earnings results. They're just coming through so strongly. The NASDAQ didn't miss out. So the NASDAQ at new all-time highs as well, as you would expect, with big tech doing so well. But it's the small caps that are certainly lagging. And we got down well into this band of support that I've been talking about for a couple of weeks with the Russell 2000. We got down to the bottom of that, but then bounced quite hard. But you can see small caps nowhere near as buoyant as the large caps. So that's really where the focus needs to be, on the US large caps. US dollar, you can see just edging its way higher, but we have got some resistance up here at about 93.5. Of course, the Australian dollar pretty much mirrored that in the opposite direction, but we're quite clearly in what is quite a strong downtrend. So the Australian dollar really suffering on the cross rates. Aussie stocks, the Aussie dollar was lower, 73.25. We actually got down under 73. And a broad trading range, I think, is looking likely for a lot of currencies. The ASX 200 rose by 0.6% over the week. We had a big sell-off Monday and Tuesday, and then resources really bounced hard and took the index back up again. So there's the ASX 200. So you can see basically it's an new all-time closing high, just under 7,400 points. But it was the rebound in material stocks on Wednesday and Thursday that certainly helped our market. I'll just look at Bitcoin while we're here. We did get a breakdown below 30,000. We closed on Tuesday at 29,800. But then, as the market is always willing to do, we got a bounce. Now, at the moment, that bounce is not on particularly strong volume, and we still haven't gone back and exceeded any of these short-term highs. So I don't see that this is anything other than a bounce that we've been seeing, a bit of a weak bounce in perhaps an overall breakdown we've been seeing since the middle of May. Precious metals. This is the weekly chart of gold. We were down a handful of dollars, not a lot of change there. And you can see a lot of indecision in gold. You're seeing a lot of intraday backwards and forwards, but it's not really going anywhere by the end of the day. And silver is still struggling a little bit compared to gold. And all of that has added up to gold stocks still being a bit in the doldrums. We had a tremendous run here, a strong uptrending channel from early March, peaked out in about mid-May, and then since then, and it's rather hard to explain, so I'm not spending too much time trying to figure out why it's happening. I'm just observing that it is, and you need to keep your exposure to gold, certainly gold producers and dividend-paying gold stocks. You probably need to keep pretty modest at the moment. I believe at some stage this will turn around, but I really don't have much of a feel for when that might be. But certainly some gold explorers in Australia are being rewarded. There's some quite buoyant gold prices. So, there still are opportunities, but it's not so much in the producers. And Newcrest came out with a very good report during the week, and the share price did nothing. So that sort of tells you how the precious metals market is running at the moment. So just to recap, gold lost $10. The futures positioning still remains historically quite bearish, which is bullish long term for the market, because it means that we're pretty close to the bottom. But we are still seeing net redemptions for ETFs, so money is coming out of the ETF market, and that causes a bit of a spiral. Money is redeemed. That means the ETF manager has to sell, which then causes the ETF to go down, which then causes more redemptions, and so you get this spiral down until you reach a new level of stability. So we are in a very bearish position, we're in a position that the data says is quite bearish, and that in a converse way is quite bullish, but we're not seeing the signs of the turn up yet. So we're down at levels that are likely to be close to the lows, but we're not turning up yet. And GDX just remains in a downtrend, so it's a bit of a somber market at the moment in precious metals. But other commodities are certainly doing better. Copper was up a little bit more, up to $4.31. Nickel continues to strengthen, and the outlook for nickel is very good. You've got tightening spreads in the London Metals Exchange nickel, and you've got falling inventories, and it all points to a supply and demand shortfall. So the outlook for nickel is very good, and certainly nickel stocks. And again, developers and explorers in base metals are performing much better than existing producers. So the market is really excited about the exploration side of things, but not so much in the producers. Crude oil was a little bit lower, but look, I just find this crude oil market very, very difficult. We've got a number of opposing forces quite apart from the geopolitics going on around OPEC. We've got upward price pressure on the oil price because we've had years of really underinvestment. The demand is not going to suddenly collapse. I think some people have sort of got that wrong. They think the demand for oil is suddenly going to collapse because of renewable energies. It's just not going to happen. That's going to be a long-term process. It will eventually happen, but it could be decades away. And because there's been underinvestment in exploration, you're going to have supply and demand tightness. So there's going to be upward pressure on the oil price. But there's going to be downward long-term pressure because of, well, for a start, the ESG funds are just not going to support these companies further. And you've also got the higher the oil price goes, the more attractive it is for renewable energies. And so you tend to then get a bit of a demand destruction on the oil side. So I just find it very difficult to have a feel for which way things are likely to trend in oil. So I'd rather just stay clear of the sector. There's the spot copper chart, a little bit of a turn up, as you can see, in the last week, but it's really been nickel that is really surging, and it's back to the highs that we saw in February. And if you look at the inventories in the London Metal Exchange, you can see they've come down from around 265,000 tonnes in April. And we're now down to 220,000 tonnes, so quite an abrupt drop in nickel stocks. All right, wrapping it up, we've still got this tussle between growth and value, and that was one thing that I didn't show before, and that was just the normal spreads that I like to look at. So this is growth versus value. You can see we're still getting an improvement. So growth is outperforming value, no question about that. But if you look at the sort of bigger picture, we're still in this large consolidation range that started in the middle of 2020. But certainly the short term looking very good for growth stocks. And if you look at consumer discretionary versus consumer staples, again, we're still in consolidation that's been running all year, but we're towards the upper end of that range. So it's certainly signalling a market that is more bullish than bearish. So there's still a tussle going on there, but long term, there are a number of forces that I believe will heavily favour technological innovation. And so that's going to be good for those tech stocks, those high growth tech stocks. And on the other side of things, there are deflationary forces that arise from technical innovation that's going to make life very, very difficult for a lot of traditional value sort of businesses. So, if you've repositioned your portfolio heavily towards the rebound in reopening stocks and the let's call them old world industrial type stocks, then you just want to be pretty careful about how far you go down that track, because I think a lot of those stocks are at risk. But look, the most important thing is, I believe, to educate yourself in technical analysis, because at the end of the day, you make money because prices move, and you need to respond to what prices are doing, not respond to what you think the fundamentals are telling you, because often the fundamentals are pointing, or the price chart is illogical compared to the fundamentals, but the price chart is what it is. It's what the market thinks that's important. So I think really important to educate yourself in technical analysis. Portfolio analyst last week, we covered a number of things. The conundrum of valuations. Valuations seemingly expensive, but in some stocks it's quite okay. And in fact, some stocks are rapidly becoming quite cheap. And also a number of great market opportunities, of which there are quite a lot at the moment. So it's a pretty exciting market right now. Okay, there's more information about what I do on my website. There's the email address if anyone wants to contact me, and we'll be back with you next Sunday. Cheers.